quarter a year ago. Revenue for the full year 2026 was $42.1 million compared to $66.4 million in 2025. Gross margin for the fourth fiscal quarter of 2026 was 27.4% compared to 27.3% in the prior quarter and 34.5% in the fourth quarter of 2025. Gross margin for the full year 2026 was 30.2% compared to 32.7% in 2025. The year-over-year decline in gross profit as a percentage of revenue was largely due to changes in product mix, a full year impact from tariffs, and a loss in operating leverage due to lower volumes resulting in higher unabsorbed labor and overhead. Operating expenses for the fourth quarter were $4.4 million, a decrease from $4.8 million in the prior quarter and $6.5 million in the same quarter a year ago. Full year 2026 operating expenses were $19.2 million compared to $26.8 million in the prior year. The year-over-year decrease in operating expenses primarily reflects the benefit of our previous actions to reduce headcount and streamline the operating model, as well as the fiscal year 2025 included cost of $2.9 million associated with the restatement of previously issued financial statements. Net loss for the fourth quarter was $2.3 million or 11 cents per share compared to a net loss of $3.2 million or 15 cents per share in the prior quarter and a net loss of $1.2 million or 7 cents per share in the fourth fiscal quarter of 2025. Net loss for the full year 2026 was $7.4 million or 38 cents per share compared to net loss of $6.7 million or 40 cents per share in the prior year. On a non-GAAP basis, excluding the above referenced stock-based compensation cost, the fourth quarter net loss was $2.1 million or 10 cents per share compared to a net loss of $2.9 million or 14 cents per share in the same quarter and a net loss of $0.1 million or 1 penny per share in the same quarter a year ago, which also excluded the above referenced restatement cost. The full year 2026 non-GAAP net loss was $6.5 million or 33 cents per share compared to a net loss of $2.8 million or 17 cents per share in 2025, which also excluded restatement cost. Adjusted EBITDA for the fourth quarter was negative $1.6 million compared to a negative $2.5 million in the prior quarter and a positive adjusted EBITDA of $0.5 million in the prior year period. Adjusted EBITDA for the full year 2026 was negative $4.5 million compared to negative $0.1 million in 2025. Turning to the balance sheet, we ended the quarter with cash and cash equivalents of $0.3 million compared to $0.4 million in the prior quarter. Before turning the call back over to Krishna, I want to provide some insight around our near-term revenue expectations. For the first quarter of 2027, we are currently expecting revenue to be down in the range of $6 to $7 million. However, we expect the second fiscal quarter revenue to rebound and be in the range of $8 to $9 million. I'll now hand the call over to Krishna for closing comments before opening it up to your questions. Krishna?
Thank you, Kevin. In conclusion, the company has faced a number of headwinds during my first 18 months as a CEO. This in turn led us to reassess our business priorities and implement changes that we expect to benefit us in the fiscal year 2027 and beyond. We have the right team in place to execute on our sales and marketing initiatives with multiple growth engines to drive a more diversified customer base and a new vertical. With our lower cost base, we are well positioned to achieve renewed growth and profitability in the future as broader economic conditions improve. We look forward to the opportunities that lie ahead and remain confident in our ability to deliver long-term value for our shareholders. With that, let's open the call to questions. Operator?
We will now begin the question and answer session. To ask a question, you may press star then one on your telephone keypad. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then two. At this time, we will pause momentarily to assemble our roster. The first question today is from Sameer Joshi with H.C. Wainwright. Please go ahead.
Hey, good afternoon, everyone. Krishna, Kevin, Stu, thanks for taking my questions. My first question is first, congratulations on the nice quarter and the Sky EMS launch as well. The question is about the Sky EMS 3.0 launch. Do you have sort of targeted pipeline for this already that you are targeting? Do you have existing customers that would deploy this alongside your already installed base? How should we look at it from a revenue standpoint over the next 2, 3, 4 quarters?
Samir, thanks for a great question, and thanks for your compliments. Yeah, the Sky EMS 3.0, as I mentioned, is built from ground up with AI embedded in it. And it's not just managing the battery analytics, it's also managing the entire energy matrix. So this includes some charger data that can potentially come through OCPP type protocols. So it's really gathering all the data that the fleet needs for managing their energy efficiently. So this is the first time we actually did this type of connection. At this point, it is being deployed, as I mentioned again, with the airline customers. All our batteries since quarter or quarter and a half are going with Sky EMS as a default option for airlines. And we have also reached out to our material handling customers, few significant ones, and having them start using this new Sky EMS platform. So as it stands today, our intent is to obviously deploy this 100% with both the verticals. And as we explore these new verticals, including the robotics, we see a potential of having something like this for our customers to embed and work through the Sky EMS for their energy decisions. At this point, that's our plan. So this is adding on top of our hardware sales, not a standalone software product yet.
Understood. Got it. Thanks for that. And you did mention robotics. My next question was about that. Do you have a plan, or at least in terms of the size of the market that you could access for robotics? How should we see it shaping as a component of your revenues in fiscal 2027 and beyond?
Yeah, so the opportunity we are working on is a very significant one. It's with one big technology company that is on the forefront of using robotics. So we are very thrilled about it. And as I mentioned, we deployed or we are deploying and testing as we speak about 70 batteries with them to start with. They are, if everything goes well and the testing goes well and it goes into production, this is going to be one of our marquee customers, and there's a good potential that they'll have a significant revenue coming up in the next couple of years, not just for 1 quarter or 2 quarters. So we are looking holistically, for multiple year contracts and deployments. I would love to speak more with you as soon as the testing is done and we know that we are deploying at scale. Yeah.
Yeah, no, that's a big emerging market, and I'm sure you're all excited about it, for it. Just shifting, I just have 2 more questions. I think there was a global cargo airliner that you mentioned last call. You had received around a $1.2 million order from it. Is there follow-on, or have those been delivered, and is there going to be a follow-on order, or how do you see that customer contributing?
They have been delivered, and Stu, yeah, why don't you talk about the follow-on orders? Yeah.
Yeah, sure. Thank you for the question. Yes, we have delivered the initial order and installment of product. We are actively involved in several other open projects. However, at this time, those are not secured, but we are looking very favorably on those additional opportunities.
Understood. And the last question, I think I should start with, again, complimenting the team on the cost cuts over the last year. It's really good to see the nice tightening of the belt there. In terms of gross margins, though, sequentially, the revenues were up almost 20+%. but the gross margin improvement was just like a 10 basis point improvement sequentially. When and at what revenue levels should we see meaningful movement, upside movement on the gross margins?
Yeah, I think, we'll see improvement when we're above the $12 million quarterly run rate. So between, 12 and 14, we would expect to get up above 30% once again.
Understood. That's all I have. I will step back in queue. Thanks for answering my questions.
The next question is from Rob Brown with Lake Street Capital Markets. Please go ahead.
Good afternoon. First on your largest customer, the pause. I know you gave some order cadence or some revenue cadence outlook. How's your visibility with that large customer in terms of the recovery of order activity?
Yeah, Rob, thanks for the question. We are in close communication, as I mentioned, constant communication, trying to get updates. As far as we heard, they are now working on planning for the next, fiscal or the calendar year, I would say. So it's in good progress, and we are literally awaiting. We are seeing the positive signs, and we are awaiting to hear some good news pretty soon.
Okay, excellent. And then on entering the robotics market, are these battery systems a standard product, or are you designing a new configuration for that market?
Yeah, the batteries we deployed are one of our UL certified standard offerings. So it was a great, use case for us to be able to find new verticals for our existing products. That said, we are very open to find new opportunities in this industry, and we may be able to accelerate the product roadmap as needed.
Okay, great. Thank you very much. I'll turn it over.
The next question is from Craig Irwin with Roth Capital Partners. Please go ahead.
Good evening, and thanks for taking my questions. So, Krishna, we've been hearing good things about potential demand from the airport ground equipment market. Can you maybe update us on your conversations with customers there? I know you have a very wide sales funnel, and when they do start buying again, we'd expect an uptick. Is this something fair for us to expect at Flux maybe in the next couple of quarters?
The airline industry, particularly as we mentioned, has been hit a little bit because of the fuel costs, right, in the last few quarters, again, because of the wars and whatnot. But we have just started seeing, through our partner, some good progress, some, renewed interest to start buying the equipment again, which we see it as a positive sign. And, I would say we would, all the signals are pointing to, more airline business in the next 2-3 quarters to pick up.
Understood. So then the next question I have is around gross margins. So, are there any changes to the long-term target? Do you still think you can get well above 30%? And, with the revenue contraction in the September quarter and just modest recovery in the December quarter, should we expect similar margins to what you had in the fourth quarter, or is it possible we see, modest margin depreciation from that level before the revenue starts to tick back up in the back end of the year?
Yeah, I think the latter part of your observation is what we'll see is, a little bit of a degradation before the revenues pick back up and we get up above 30% and into that mid-30s range.
Okay, excellent. And then for us to understand the materiality of the robotics revenue, you said you're working on delivery of 70 packs. I think you'd said you'd already delivered 30. Can you remind us which product, which UL certified product you're supplying in there, and roughly what a fair or MSRP, a fair price to use, sort of as we do back of the envelope math to look at the materiality for the September and December quarters?
Yeah, Craig. So the model is our C48. And a good ASP to use, a good round ASP would be $10,000 per battery.
Excellent. And then if you were to scope out the long-term potential with this customer, 70 is not a bad number to start with. It's a great number. Do they have the opportunity to buy in the hundreds, thousands, many thousands, tens of thousands? I mean, how would you scope out this individual customer?
Yeah, I would say that, these are batteries that we've provided for, prototype build and testing, so that when they go to scale, it'll be, hundreds per year.
Understood. Well, congratulations on the progress. I'll hop back in the queue.
Thank you.
Thank you.
This concludes our question and answer session. I would like to turn the conference back over to Krishna Vanka for any closing remarks.
Thank you again for joining today's call. One final note, we will be in New York on September 10th, 11th, 14th, and 15th with opportunities to meet with investors at the Lake Street and H.C. Wainwright conferences, as well as an additional day of non-conference meetings. If you are interested in meeting with us while we are in the city, please reach out to Leanne Severs at Shelton Group to schedule a time. I really look forward to some good discussions. Operator, you may now disconnect.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.